Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. Today, we've got our weekly Investing Power Hour episode, number 204. We've been doing these for plenty of episodes, and people are enjoying them. And on these episodes, we talk all things financial markets, any news, anything piquing our interest, any earnings, anything relevant in the financial world. We try to tackle it here, and we do these live on Thursdays at 5 p.m. Eastern Time. Usually, we're going a little early this week because I had a conflict. I got a flight. But where do we want to start, Brett? Where do we want to kick things off?
Well, I'm curious, Ryan. Is it a work trip or a little vacation or a little mix of both?
Vacation.
All right.
It's
Well,
yeah, just a little more pleasure in business, I guess. But you know what? We haven't given an update to the listeners on your whereabouts because you are doing a little anecdotal research for us, little boots on the ground down there in Latin
that's true.
America.
That's
Any
true. Yeah.
takeaways from the investment side of things? And do you want to disclose where you are?
Sure. I am in southern Brazil. Uh, Turns out Portuguese is a different language than Spanish. It's very hard. I don't know it at all. But from an investing lens, yeah, people use Mercado Libre and Nubank. That's, I think we already knew that. But
And you had the
yeah,
same takeaway in Argentina.
exactly. Although as people figure out in my emerging modes report, and many people already know, Argentina does not have Nubank, and that's one of the reasons why Mercado Pago is much more profitable there, in my opinion. Yeah, what I'm really worried about is that I can't seem to figure out the background here, the lighting. I have so much good natural lighting in this Airbnb that it makes my video not look great. But people are here to look at our videos. They're here for our stock analysis and entertainment. Ryan, we have so many topics this week. I think I actually have a record of four bubble watch topics. There's a lot of, I think people out there even claiming that the top is in an AI. There's a ton of stuff. I mean, open AI's preferred return guarantees. There's, well, just plenty of topics. I mean, SpaceX is about to IPO. Apparently, we might have an S1 dropping within the next week, which is exciting. And then, as always, we have plenty of stuff that I think will be quite fun. We have a small cap of the week that a listener suggested. You have some luxury stock stuff, DoorDash thoughts, plus plenty more. But if we're talking anecdotal evidence in Brazil, for anyone that's worried, yes, people use Nubank and people use Mercado Libre.
All right. I don't know where we want to start. Let's maybe we talk with the luxury stock drawdown. This is something that kind of caught me off guard. I didn't really realize this up until I think last week when you posted about Hermes. But if we look at sort of the top four luxury stocks, I think this is, I call them my top four. There's no qualification here, but Essilor Luxottica, Hermes, Ferrari, and LVMH. You could probably throw in like Kering and Prada, but I just, for whatever reason, didn't choose those. All four of those and the luxury sector broadly are in pretty significant drawdowns. So EssilorLuxottica is down 39% from highs. Hermes is down 41% from highs. Ferrari down 43%. And LVMH down a whopping 49%. I was trying to figure out what's causing the collapse. And if you look at, and Brett, maybe you can share this chart from our friends at Fiscal.ai. If you just look at the revenue for uh, the combined revenue of LVMH, Ferrari, EssilorLuxottica, Hermes, and you add Kering too, it is the first time, excluding the pandemic, which happened quickly and it we saw the bullwhip there. Uh, it's the first time since the GFC that industry revenue has declined for luxury, for the whole luxury category.
It's a
Brett
nice little
sharing it.
chart you got here. Yeah. It
Yeah,
seemed, does this seem like a bullwhip to you? Sorry to cut you off, but there was such good
maybe.
growth coming out of the pandemic. Yes, this has happened in a lot of industries with inflation, but I feel like this is just a normalization. Back to the long-term trend of steady growth, a little bit above GDP.
Yeah, it could be. Maybe there's some sort of a wealth effect coming out of COVID that helped. This isn't the kind of these aren't the kind of companies that benefit from the stimulus checks. I don't think people are taking those $1,400 payments and going and buying Ferrari, but there was, there could be potentially wealthier people in parts of the world that are able to afford these products. But the other part is China specifically has been a big pain point. That was accounting for I think that was the largest growth market for most of the luxury companies, and they've had a big sort of property crisis from what I've read. That's affected a lot of wealth there, and so they're seeing particular weakness in that geography. Tariffs potentially are impacting these companies also, and then maybe some, as of late, maybe some Middle East headwinds among like the UAE.
Oh, that's a fair point. I'm not sure how large that market is for them, but it could be Middle Eastern people going to Europe and shopping, and they can't do that anymore. Yeah, yeah, that's fair. That's fair on sentiment. Mm, yeah.
Yeah, it's hard to point to any really any one thing. I mean, we did see sort of record growth coming out of the pandemic. 2020, I've got the combined revenue here, 82 billion among those five companies, and by 2023 they were at 151 billion, almost doubled revenue over 3 year span. It's now since come back down. I've got the valuations here. These are the enterprise value to EBIT multiples, sort of the acquirer's multiple for those familiar with their valuation work, and from Tobias Carlyle's book.
Always love Tobias. He's one of the
Yeah,
few people that came on our show when we were nothing. So I
true.
always feel grateful to him.
Yeah, shout out to Toby. So here are the multiples. Let's go highest to lowest. So EssilorLuxottica is trading at 29 times EV to EBIT. Um, Kering, 29 times as well. Hermes, 24 times. Ferrari, 24 times. And LVMH, 14 times. Do any of these stocks interest you?
Ooh, let me try to look again. Do you want me to just rank podcast style stocks I've never owned, and we'll see. I think we'll go
Sure.
Hermes 1, Ferrari 2, LVMH 3, Caring 4. Although maybe Caring is at very, very trough earnings because there's been so many struggles there. And I read, I believe, like one Wall Street Journal article. So by no means am I an expert on the stock yet, but I read that they may be turning things around. And then Exo, the glasses company I can never pronounce, sure, they have the partnership with Meta, but I'm kind of out on the surveillance glasses that teenagers wear. There's already blowback, and barely any people have them. I think those are going to be nothing. Hermes 1, Ferrari 2, LVMH 3. LVMH, I think it's just less quality than Ferrari or Hermes. But curious your thoughts.
And you mean like in terms of the
Business.
aura of the products or the
Just the business quality is worse. Yeah, you have what? Less pricing power, probably. I would think. I mean, I know half of it is Louis Vuitton. I think of their profit pool, but again, they have a factory in Texas. Hermes handcrafts everything in France. That's not disruptable by automation and pumping out a bunch of copies from China,
yeah.
right?
I think I'd probably rank similarly. Ferrari, the only thing that doesn't excite, like I like the Ferrari business, and I think it's very durable. Like there's probably, uh, I imagine people have heard sort of the Ferrari story about how it's sort of like a luxury club, not a car maker, all that stuff.
Hey, that was your pitch at the Motley Fool as your internship, right? That was your final project,
I think that was the one.
correct? Right?
Yeah, that was the one. Yeah,
Would have
that
worked
and
out if you bought, I think.
yeah, I haven't. I don't know the total stock returns over that time, but I would guess they're positive. My issue here is like there's a production ceiling. Like if you can, is there any risk that they erode the value? Like they started over the last couple of years seeing uh, record growth in vehicle deliveries. That whenever I see that for Ferrari, I think that's not beneficial for the business. Like it might be in the short term, and maybe that was sort of some of the Chinese customers that are now disappearing. But I would ideally, if you're Ferrari, you grow production or deliveries 1 to 2% a year with 6, 7% price increases every year. That to me seems more sustainable.
I
The
think they guided for that. I know there's people out there that are much more experts on the business. I believe they guided for unit volumes not to grow this year, so that could be a good sign if that's what you're worried about. But I do agree where you need you can't have the product available to everyone that can afford it. And even if there's a slight growth in the number of wealthy people out there that can afford one of these products, it really is that resale value. For example, with an Hermes bag, the resale value can be 2x, 3x, depending on the product. And if that stays around, that gives them perpetual pricing power for, I mean, if you raise prices at 3% every year, you could probably do that for three decades. I think we did the math once with that luxury overview episode, which I would still recommend people listen to. If you kind of search it in our podcast player, you'll be able to find it. It's with Sleepwell Capital and Leandro from Best Anchor Stunts. I believe we went like over 2 hours with them. Extremely comprehensive, and it's one of our most loved episodes. I think that's aged quite well.
Yeah, I think I'd probably rank Hermes number one, Ferrari number two. I don't know the carrying business super well, and if it is at trough earnings, maybe that's something to be excited about. But it is. This is a good example of. It seemed like 2, 3 years ago, as these businesses were growing really quickly, there was this sense that even if we hit a recession, the recession's not going to impact these luxury businesses because the wealthiest are going to continue to buy. I think we've maybe seen a dent in that thesis where we've seen some recessions and difficult economic environments in big markets like China, and we're seeing the pullback. At least for, I think Hermes and Ferrari have both still grown revenue, but at sort of the aspirational brands, if you want to call them that, Louis Vuitton, for example, which is kind of right. I think it's a tier below. There's sensitivity in terms of consumer spending.
Okay. I have nothing else to add. Did you hear about this Fundrise Innovation Fund? We have a bunch of listeners in the Substack chat this week
I did not.
that well, I'm going to give an article from 2 days ago from Sherwood News. It says Fundrise Innovation Fund is a publicly traded venture fund that owns some of the biggest names in private tech, and it is up more than 750% since it went public last week. The fund went public on March 19th with a share price of $31, and it's now at about 10x that by Thursday morning. However, 2 days later, now as we're recording this on March 26th, Citron Research came out of the woodwork, decided to short on valuation concerns because, according to one of our Substack chat members, apparently they were trading at 15 times NAV, which is crazy, I would think. And if you look at the fund holdings, you have, as of early 2026, 20% Anthropic, 18% Databricks, 10% OpenAI, 7% Anduril, 5% SpaceX. These are some pretty premium valuations. That is quite the crazy start. 15 times NAV. I mean, it's just a holding fund. You already have as well, I think, a 2% management fee on top of that. So Fundrise, hey, great launch. Good business if you can get it. But it shows the animal spirits, I think, are still there. But on the other hand, I feel like this shows that once again, and maybe we'll talk about this later or we can talk about it now, Musk is perfect at timing capital markets. He is trying to raise a ton of money, and the demand is just outrageous for these private companies.
Yeah, it helps that these companies, while they're private, don't have to report their numbers. Like, it's vibes, really. Like, for public market investors, they want, all they hear is the positive things. Generally, you hear a lot of the positive things for these private companies because they can be selective over what they announce. And you just want to be a part of it without having any sense of what you're actually paying or what price you're paying. So it makes sense that a fund like this would get a lot of demand. 15 times NAV makes no sense whatsoever. My hot take here, and maybe this can go into the SpaceX uh, imminent IPO, I think it's going to be wildly oversubscribed, even at the numbers you're talking about.
Sure, we can go into the numbers. Yeah, I don't know if Ryan will allow it, but I would like to automate or allocate half the show to Bubble Watch this week if I could, because there's just a lot of stuff out there, but I'll try to keep it quick with a lot of these topics. First off, this article out there I found talking about the private market transactions is just an all-time quote. It starts out with, quote, entrepreneur Tishpal Bhatia is confident he owns a slice of Elon Musk's SpaceX, but he can't be 100% sure. This is apparently out there. It's a separate topic because there's a lot of special purpose vehicles. You might see the term thrown out there, SPVs, for private investor trading, and it's unclear exactly if people actually own the stock, which is quite lovely. I think it's going to be great for the story, and if anything comes out with this, at least for us talking on the show. But if we
It's
go to
actually
that, go ahead, Ryan.
on that. It's actually a brilliant model because it's like it's almost information arbitrage where like if I'm a VC or say I want to set up some VC fund and I actually don't know the mechanics of these SPVs, but my assumption is that it's some private investment group that invests in a variety of companies totally like irrespective of any valuations, doesn't matter. And they just turn around and sell it in some structure to retail investors. So they really like that private investment group doesn't have to care about the numbers. They just got to care about selling it. They just got to care about having the hottest name in that fund, whatever it is. I'm assuming that's the way the structure works.
With this guy specifically, it's trying to get actual shares, like of a single company.
But how?
But back to it's just privately traded. So you have employees or existing investors that have been around with SpaceX for a decade, and then they're selling into the market. They find another private buyer who's a what do they call it, accredited investor, and maybe there's the middleman here trying to broker the deal, but you're not confident that it's actually the underlying shares that you want to own. Which
So I'd be concerned if I
yeah,
were.
let's buy those at 100 times sales. Why don't we? Uh,
Let's talk about this reported valuation.
Sure. So, and I think these numbers, I agree, is probably going to happen. I think the reports out there is that the valuation could be $1.75 trillion. And again, they want that number out there to set the tone because then if it comes down a little bit, it's not the end of the world. And they want to raise, Ryan, 75 billion. That's US dollars, not pesos. All right. That
These
would be over 2 times the size of Saudi Aramco, which is the largest ever.
in terms of money raised.
Money raised, yes.
Yeah. The, my gut says they're going to raise that much money and then some. I think they're going to have an absurd valuation because no one cares. Like
They just
people
want
like
a piece
us
of the
care.
action.
Yes,
People
they
would
just want to be
buy.
part of it. They just want the name, and there are enough. If the last 10 years, last 15 years has taught me anything, people just believe in Elon Musk. And it's only grown. The cult has only grown, and they will buy whatever's offered to them.
There's so many different ways to go about this. I think one, for an example, back in even 5, 10 years ago, people talk about buying Tesla stock, and I know that this may seem like dumb, but they say, "Well, SpaceX is going to Mars." There's no actual financial sentiment, but the underlying demand from the retail crowd for SpaceX is going to be higher than Tesla, and Tesla is one of the highest ever. So I think you're right on that point. Second, apparently the S1 filing is going to happen this week or next week. Should we do a special within maybe the Wednesday slot, an S1 breakdown?
I think we have to.
Listeners, tell us if we should.
My concern is that this is going to be like a 600-page document.
That's fine, Ryan. You don't mind homework.
600 pages of homework might be tough. Yeah, we got to do a special episode on this. Largest IPO ever, most likely. It's gonna be good. The funny thing, yeah, like you said, I think a lot of people for a long time just treated it as like I'm not investing in Tesla, I'm investing in Elon Musk, and like literally for believed that their ownership of Tesla gave them ownership of everything else that was related to Musk, and now it might come to fruition. So
Oh, you think I did I say it last week that my hot take around the mergers happening this year? They're setting things up.
I don't know if you mentioned it, but I saw you tweet about it, and I agree. I think it's all going to end up under one umbrella.
Yeah, we don't need to talk about Terafab, which again, the naming is just phenomenal. Apparently, they're going to 10x the size of Taiwan Semiconductor's output. Hey, I hope it happens. The world will be a better place, but TBD if that actually does. But what I thought was very curious, as someone who knows way too much about Elon Musk and his companies, is that it's a combined endeavor between SpaceX and Tesla. And I think that's just laying the groundwork to saying, look, we got to be together to have this work. And they're going to pitch that. They're going to merge. It's going to be a whole party. It's
The
going to
name will be
be,
X.
yes, yes, yes. We're on the
Yeah.
same wavelength there. Come on. That's happening within the next 18 months.
The thing that's funny is like all of this is going on. Tesla as a business has really struggled over the last 3 years, and it just like it's as if no one even cares anymore.
No, they don't. Optimus is coming. Come on. Optimus is going to be the only employee at Terafab, Ryan, within 3 months, within 18 months. But look, they need to have a new story. They need to raise. I don't know if Tesla needs to raise capital, but if things keep going as they are, the valuation is going to compress. They're going to need money eventually. And given their ambitions, Cybercab, all this stuff, full self-driving Optimus, what was this Terafab thing? Crazy ambitions, which we should be nice to Musk. He does execute, a lot of the time with this on a long enough time horizon. Now, these new
Yeah.
promises seem a bit crazy. I'm trying to be a bit fair to the audience, Ryan,
No,
as
yeah,
someone
yeah.
who's a bit skeptical. But I think the story is going to be we're going to merge. We need a ton of money. We have this story to sell AI data centers in space. And what I think Musk knows above all else, probably smarter than OpenAI and Anthropic, is that he needs to get to the capital markets quick because things are looking a little creaky, I would say.
Yeah. I mean, credit to Musk because you're right. He's 100% phenomenal at timing capital markets. Like, and I think he has overpromised on a lot of things, but the capital raises have always helped him uh, execute or at least attempt to execute against his ambitions. So he's got a big piggy bank to work with, and he can throw a lot of money at some of these big issues that he's trying to tackle.
Yep. All right. Let's get some more topics here. Do we want to try? Again, I'll keep it. We'll keep it brief. We got a lot of maybe more vegetable topics that I want to hit. AI update, Ryan. We have some listener questions here that I think can maybe spur it. Let's see. One, Tyler says, since it seems like OpenAI is inference constrained by dropping Sora and H100 and B200 rental rates are skyrocketing, does that mean hyperscalers are going to have margin expansion? And it seems like Anthropic is increasing ARR by around $10 billion or so a month. Doesn't this imply AWS is going to have massive acceleration in revenue? I'd agree on that. But then we have other questions here around, let's see, predictions around OpenAI. They won't IPO in 2026, says the other Tyler. Sarah Fryer was interviewed by Kramer earlier in the week. She stated the company is on a journey to get ready for the public markets. Ooh, Fryer. We need better energy than
Wait,
that.
Sarah Fryer's the OpenAI CFO?
Yeah, which I have to say, given what is going on at the last 10 years of Block slash XYZ slash whatever Square's name now, I don't have much. That doesn't
No.
inspire much confidence for me.
Yeah, I agree.
This all leads into the topic that I think is maybe making me to pull out. I don't know. I don't know if this is the best day, but I'm pulling out the WeWork meter on OpenAI because I think it's flashing code red. Because this investor, did you see these return promises? I'm sure you did.
Yeah, yeah, I saw him.
Okay. So here's the quote from Reuters, which had the exclusive reporting. OpenAI is offering private equity firms preferred equity stakes with a guaranteed minimum return of 17.5%, significantly higher than typical preferred instruments. Two people familiar with the matter said. It is also offering early access to its newest AI models as it seeks to enlist investors such as TPG and Advent for its joint venture. Now, I had AI Gemini, funny enough, run a comparison to what this is. These numbers are compared to what Buffett offered Goldman Sachs in the liquidity crisis of the great financial crisis. and it's significantly worse. So the OpenAI is trying to raise money at worse terms than the investment banks had to in one of the greatest liquidity crises in banking history. This is it AI we work, Ryan? Come on, tell me I'm crazy.
It feels like it. I haven't heard a good piece of news from OpenAI in like a year. Everything feels so concerning with them. Why can't they just slow down? Like th- all of this, like this liquidity crunch, it all feels extremely self-inflicted. And I know they're in this race, this AI race, if we want to call it that. But if they slowed down just a little bit, I think they'd be able to sort of bridge the gap maybe and get public and be okay. But my guess is they are just hemorrhaging money, and I don't think that's going to sit well. I think it might work for SpaceX. I don't think it's going to work for OpenAI. The, this 17.5% guaranteed return is truly, truly outrageous. That's that's unheard of. I'm pretty sure, and I've
Well,
never heard
I mean,
of it
Buffett had
higher.
10% dividends on his preferred stock that he could kick into a equity position, which he did and made fantastic returns on. But yeah, the 17.5% would be.
Wouldn't you be upset if you're any other investor
Yeah.
that the this new tranche is getting 17.5% guaranteed returns?
Oh yeah, and I think and we don't have the full numbers. This is just recording. I believe they're senior, like above all other investors too. So it makes me think they're a little desperate, to put it mildly. And you know
Remember?
what I think, we
Go
have
ahead.
other topics to go into, is that interview on, what is it, the Brad and Brad, not Brad and Brad.
I was just thinking about that.
That one is going to be in every documentary. I can
Yes.
just envision it now. Either whether this is the moment that OpenAI turns things around and becomes a massive success, or if the call comes crashing down, it's that interview when Altman told Gerstner, "Sell if you want," which everyone said, "Yeah, do it. Get out, Brad. You have all these other investments that are doing great. OpenAI, you don't need them."
That's exactly
Um,
what I was thinking. If you're Brad Gerstner and the CEO came on and told you, go ahead and sell, like if you're so scared, basically, like threatened him, and Gerstner's like, whoa, no, 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 this is what other people might be saying. That's not me. It, and then they turn around and give the next investor 17.5% guaranteed returns. Wouldn't you be like, okay, yeah, maybe I should sell. Maybe it's time. It goes to show for me. I think there was this quote a long time ago from, I'm blanking on his name, but he writes a wonderful column. I think works for Bloomberg now. Uh, and he said basically, like, there's no venture capital is the biggest sort of herd animal of any investment community in the world. Like, groupthink is super prevalent in the
right.
VC world. It just goes to show, I think, they just want association, like company association. Like a lot of VC firms want company association with these big names, and they're
It
willing
helps them
to.
raise money.
They're
I think it helps
yeah,
them. Yeah.
yeah, probably. I mean, they're willing to look past any actual investment concerns because they can raise money and they want to be invited to the parties.
Yeah, the Chicago Pension Fund can go, well, you guys got access to OpenAI. Oh, wow, interesting. I hear that's hard to get. Oh,
Yeah,
here's $10 billion.
yeah, I guess. Okay, do we want to keep going on Bubble Watch or
Yeah, what else do I even have here? There was something about crypto-backed mortgages.
I need to take a break from this. Let's eat our veggies for a second. Talk about something
Uh,
tangible.
Yeah, let's go with you with Grab entering Taiwan, because I think that relates to Grab. You've been interested in them on the watch list. It enters a market that Coupang is trying to enter. There's the Chinese players. Yeah, I think this should be quite interesting.
Yeah, I've been doing more work on Grab. They are the leading ride sharing company in Southeast Asia, for those unfamiliar. Uh, I like them. I like the business. It basically, for simple terms, it's sort of the Uber of Southeast Asia, and then they've got some fintech capabilities for the consumer app. And this week they announced that they are buying Food Panda. which is the leading food delivery app in Taiwan for $600 million in cash.
Great name for an app.
Yeah,
Food Panda. Come on.
and I think it was owned by Delivery Hero is the overall company name. But yeah, Panda primarily competes with Uber Eats in that market. Those are sort of the two leaders. And here's the quote from Anthony Tan. He says, "This acquisition will mark Grab's expansion into Taiwan, our ninth market and first outside of Southeast Asia. This is a natural next step for Grab, as our experience in Southeast Asia is a direct fit for this market. Our long-standing expertise in managing complex delivery logistics for dense and high-traffic cities is well suited for Taiwan's bustling cities. Taiwan's population of approximately 23 million also has a high demand for mobile-first services, similar to the Southeast Asian consumers who Grab serves every day. We see a significant opportunity to grow the food and groceries delivery scene here." Grab has $6.8 billion in cash and equivalents on the balance sheet, so not a huge dent for them, a $600 million cash acquisition. And Food Panda apparently generates 1.8 billion in annual gross merchandise volume or value, whatever they go by. Grab, for context, generates about 14 billion, so little over, I guess, probably 15% of Grab's current GMV. I think the optimist here would say that Grab can accelerate the business. Grab can potentially improve margins with their own sort of logistics capabilities and what they've built with their app. The other maybe exciting thing here is Uber tried to buy Food Panda 2 years ago for $950 million. So I would be maybe concerned that maybe Uber was just willing to way overpay, but maybe there was a slowdown as well. Like I would think if you're paying basically 30-40% less of a price tag 2 years later, I would guess there'd been some growth headwinds, but that's all suspicion on my end. If you're looking at Grab, they have made acquisitions like this in the past. They bought Uber's Southeast Asia business, I think in 2020 timeframe, maybe 2019. And they also bought Jaya Grocery, which was a big competitor in the grocery delivery space in 2021. And they have done a successful job of migrating those customers onto the Grab app and expanding those businesses. So I think I like the deal. We don't have a ton of color on the valuation and all that, but Grab has been successful with this before, and these do tend to be sort of market share, like winner take most markets, it seems. So I like it. I like Grab as a business. I like Anthony Tan. A little positive anecdote about Grab's CEO, Anthony Tan. In the early days, I think I might have said this on our episode, when they were having a hard time getting drivers on the app, he would wake up at 4 a.m. and go to the gas stations where all the taxi drivers would get coffee, and he'd hand out free coffee if they joined the app. So he was a little boots on the ground CEO, willing to get after it. I kind of like that anecdote. I like the way he operates.
We have a comment here in the chat that says, "I like Grab, but for Southeast Asia, I like C Limited much more. They're running a very similar playbook to Mercado Libre with a gaming cash cow to fund their expansion without taking on debt. Cheap right now, too." As someone who likes, and we got to talk about Coupang investing heavily in Taiwan, that could be a competitive threat there because they do have the combination of e-commerce plus food delivery, but it's pretty early days. I think it'll be quite competitive. I like, as someone who's interested in Coupon and Mercado Libre, I don't like that C Limited exists because they just go into markets and say, hey, we're just going to compete with no margin and see what happens.
They do.
At the
Look
end
at
of the
them in
day, though,
Brazil. Look at them in Brazil and
yeah,
read some of
yeah,
those expert transcripts. They are more than happy to lose money in Brazil.
yeah, it's, I'd say I've been thinking about it a lot because I'm doing a research report on Mercado Libre next week. But in regards to Grab, with a lot of these markets, I believe there will either be under one umbrella or two. There's going to be the Amazon type player with the warehouses, the fast delivery of goods overnight. And then there's going to be the fast delivery from the what I'd call the motorcycle drivers. In the U.S., it's a little bit different, but it's kind of the ones with the big backpacks and the logos. There's going to be one of those players. Maybe Grab can tackle that market, but at the end of the day, I kind of think again, and a lot of these companies are trading at reasonable prices. Maybe you just take a basket approach and go, I want Grab, C Unlimited, Coupon, Uber, DoorDash, Mercado Libre, Rappi's not public, but I think they're partnering with Amazon actually. Then maybe add Amazon into the mix as well. Buy those. Do you think that basket performs well over the next decade?
Can you list them again?
Grab. It's basically all fast delivery and e-com. So Grab, C Unlimited, Coupon, Amazon, DoorDash, Uber, Mercado Libre. No,
Yeah, I
Rappi,
think
South
that
America. Yeah.
beats the market. The and speaking of DoorDash, I this isn't really news. It's news to me. Maybe news to you as well. I'm getting interested in DoorDash here.
Okay.
45% drawdown they're currently at. And a lot of it's related to this AI concern with the Citrini piece, which is very sort of like far fetched in my opinion. I've got some notes here, but let me just, I'll try to bullet point it so I don't go too long here. The customer adoption is still really strong. Gross order value is growing 23% year over year organically. That doesn't exclude, or that does not include their Deliveroo acquisition, which they made or they closed on last quarter. They have shown that they are profitable on a GAAP basis. So they've gone from, I think, negative like 10% operating margins or negative $580 million in operating income. Shout out to Fiscal.ai for giving me this data really quick. $580 million in operating losses to $723 million in operating profits over the last 2 years. So it's been a very big transition. They're at 5% operating margins now. They've done that without seeing a slowdown, like a meaningful slowdown in deliveries. And I think they are less susceptible to the autonomous vehicle risk than a business like Uber because there's a lot of complexity involved in the food and the grocery delivery business beyond the ride, right?
I got one word for you, Ryan. Optimus. That's not.
Tesla,
Yeah, yeah.
he's gonna make the food. He's gonna place it. He's gonna.
Yeah, he's gonna take it. Well, there's going to be an Optimus guy at you're making the food at the restaurant. There's gonna be the delivery driver as well. And he's gonna take it to your front door. No, I agree with you. That was a complete joke. That's not gonna happen for many years.
Like I kind of think about it like this. In theory, if a Waymo were to just show up to a restaurant, the restaurant wouldn't necessarily know what to do. But if an order gets placed through DoorDash, where the restaurant owner has already uploaded the full menu and is familiar with like the order intake process, instead of just waiting at the door for the driver to come in, if they just go in and they place, like, let's say DoorDash has rented autonomous vehicles from Waymo or whoever, and they just go place the to go box in the car in a secure spot or whatever. That makes sense. I actually think it kind of supercharges DoorDash's business because it takes out the biggest cost, which is drivers. The other, so I like the AV angle for DoorDash. The other thing is, I'm pretty sure the recent spike in oil prices is part of what's causing the price collapse for DoorDash lately. DoorDash recently launched an emergency gas relief program where eligible drivers automatically get weekly payments based on the total distance driven. So it's basically just meant to sort of help drivers afford the jump in gas prices. It's going to cut into margins and it's probably going to hurt short term profitability. But I think this is helpful for retaining drivers in sort of this market share battle with Uber Eats. I like that they are treating drivers well.
Mm, yeah, that's fair.
Any thoughts on the business? Now, I
Uh,
will say this: EV to EBITDA is 42 times. Margins are
ah,
expanding quickly, I would add, but it's not like cheap.
yeah, I had to take a look before on Fiscal AI at the gross profit multiple, kind of a nice top line number. That was about 9. So it's not overly cheap, but that's not crazy expensive. Uh, I like the business. I was someone in the past that had a doubt on this business's viability because I just thought it was too expensive and people wouldn't use it. But look, you got to look at the numbers. It's people like this stuff, even if there are curmudgeons like myself that think it's a complete waste of money and gets you low quality food.
I'll tell you what, you are not the only one. There are, I
There's
have
a lot
been
of people.
shocked.
Yeah.
People hate the entire concept of DoorDash. Like, they think it's the laziest thing in the world. And I don't know. I mean, it's convenient, right? Like people pay a little extra to not have to go get something. I don't do it.
A little extra is going a long way there, Ryan. A little extra is going a long, long way.
That is true. I don't
And
do
the
it.
quality of the food, that's where I get hung up. But we don't have to have a whole philosophical debate on whether it's better.
Someone asked, where would you peg mature margins for DoorDash? I honestly don't know. Um, what are gross margins at? 50%? I think.
Yeah, but operating, what's let's say operating margin. Let's try to pull it up right now.
I think operating margins are at about 5%. My guess would be they
Oh,
could get to
they
probably
could get way
20.
higher. Yeah, they get way higher. That's the story.
Yes,
Yeah, we're at
especially
five.
like if autonomous vehicles, let's say that is a tailwind for them, that would take out some cost and boost the gross profit line. So I would guess 20 could be mature margins, maybe higher, but yeah, uh, I'm interested. It's moving up the watch list for me.
Yeah, and listeners should remember that revenue is after the driver and restaurant cut. So it's what DoorDash is keeping, correct? Or am I wrong?
I honestly haven't dug into the accounting.
Yeah,
I would assume
we don't
so.
know.
If it's
Maybe,
50% gross margins, I would assume so.
yeah, I'd assume so as well. But hey, maybe it's another uh, stock research episode for you in 2025 or 2026. Excuse me.
Yeah, yeah, that might be my next one. Do we want to talk turbo quant?
Sure, sure. What a
I saw some. I
that
saw
was my
some.
nickname in algebra 2.
I
Turbo Quad.
heard. Yeah, I read some comments. People were like, this is what I was called my first year in the investment bank.
Turbo Quad. Yeah, yeah, yeah. I was actually called the math robot, so you know
Hey,
that was my life. It's
close.
not a
Turbo
bad
quant's
name.
not that far off.
Yeah. So let's get into the what's actually happening here. Alphabet put out a nice blog post. They go into great technical detail over a huge increase on model efficiency that they had. There was a lot of people talking about how this came out a year ago. And then that's fair. You know, it's not going to affect the numbers today for some of the businesses that might be hurt. But essentially, it's greatly increasing the efficiency of running the AI models. That's it's about what I know with the new compression algorithm. I will say the Silicon Valley TV show, once again, very prophetic. They go into a lot of technical detail. Like I said, it went really over my head, but this is the line that stood out to me. Quote, the results for long context needle and haystack tasks are shown below. Again, TurboQuant achieves perfect downstream results across all benchmarks while reducing the key value memory size by a factor of at least 6x. PolarQuant is also nearly lossless for this task. I think what that means is that they're 6 times more efficient and the results are the same, right?
Close. Nearly lossless is maybe
Okay,
worth
nearly
mentioning, but
lossless,
yes,
sure. Maybe
results are
well,
similar. I did see a lot of. So basically, Google announced this, and it was like this incredibly technical explanation of what TurboQuant's doing, and a whole bunch of people in the comments were like, "This seems good." I don't know.
yeah,
Sounds
that's
good.
I think, well, okay, memory stocks were down in the news. I think one, you know, if you have 6 times more efficiency, you're not going to need as much memory when running these AI queries for inference, is what I'm reading. I would think maybe this means Nintendo is going to be able to get product. Who knows? I believe that that'll be the case. I'm saying that a little bit rhetorically or sarcastically. The one question I have though is why release this to the public? And I think it's because Alphabet does not need to play the game of going to the computer chip complex as much as every other player out there, given their TPU dominance. And they want, for them, if AI models get more and more efficient, that's where they win.
Maybe, maybe they also just have a history of publicizing like everything.
Sure. Sure.
But I would guess that if you asked Micron for a list of their top 5, top 10 largest customers, Alphabet's probably still up there.
That's fair. That's fair. The well, I think okay. Look, whatever TurboQuant is, my thinking is you know specifically I don't know exactly what is going on, but I think over the long term, just similar to how Google optimized Google search for 15 years or the last 25 years, these models are going to get much more efficient, and I don't think there's going to be trillions of dollars in memory and chip demand. There's $1 trillion incentive to get these models more efficient. And I think the smartest minds in the world who are all working on this are going to make it happen.
Yeah, I don't like if you look at Micron's most recent quarter, I don't think growth like that's going to be sustainable. I hope it's not, or else everything's going to get a lot more costly for customers.
There's going to be a lot of profits in South Korea, that's for sure,
Yeah.
and Boise, Idaho. Maybe the downstream effect of what I was thinking is you should bet on Boise State to do well in football because their NIL program is going to get. I
So
think it's
turn
going to
this
do
into
quite
a
well.
Kalshi bet or a polar
Yes.
market
Hey,
bet.
what do you think? I think
I
honestly that's
think you might be hopping one step too far.
yeah, it's about four steps too far, but who knows? Yeah. Their NIL budget's going to increase if Micron stock is up 10x.
Do we want to talk? I hate saying this word. Do we want to talk crypto-backed mortgages?
Yeah, this was something. And don't worry, we'll get to small cap of the week after this. I guess we're going to be able to use our $1 million in fart coin now to make a down payment on a house. Thank you to regulators. Here's a quote from this article is just from this morning. The mortgage finance giant Fannie Mae will soon accept so-called crypto-backed mortgages for the first time, the latest expansion into cryptocurrencies for mainstream financial transactions. Once the crypto assets have been pledged for the down payment, the homeowner can't trade them. That's fair. If the value of the crypto in the account falls, the mortgage loans aren't affected as long as the owner keeps making monthly payments. I think that's a little peculiar because, one, you're relying solely on income, and if it's going to be collateral, well, shouldn't there be, am I using the word right, covenants in the contract where if the value of your collateral goes down a ton, the bank is going to repossess? I don't know. I don't know. But
Yeah. How far into the crypto universe does this extend? Like,
it said
because
Bitcoin only. I made the hard coin joke. It said Bitcoin only at the moment.
there may be my concern if I were an underwriter would be obviously stability in the Bitcoin price. Like, if Bitcoin does drop 50% or 40% or whatever, and you have to repossess the assets, you are getting significantly less. Now, there might be enough stability in Bitcoin, although it's still proven to be extremely volatile. But I would just think, like, imagine going to the mortgage underwriter and like showing them your financial assets, and you're like, "Here's Tits coin. I have, I have a hundred
Yeah.
thousand dollars in Tits coin.
Oh God.
Would you, do you take this?" I mean, it would just be one of the most awkward encounters. The I would not, if I were the underwriter, accept these assets. Most of them, probably Bitcoin as well. I mean, it's just like intensely volatile.
Yeah, I guess if it's allowed to happen doesn't mean it will happen. I could see it being a part of someone's portfolio if they need, to prove that they're credit worthy. Like, oh, hey, I have all these assets. This is a part of it. Sure, yeah, it's fine. But
It
yeah,
is an interesting idea of how much has money being tied into Bitcoin and the rise of Bitcoin impacted mortgage demand or home
it's
buying
fair.
demand in the country over the last few years, if the underwriters aren't accepting it. That is kind of interesting. Well, it was capital, in my opinion. It was a lot of capital going to waste, anyways. But if you could not use it to back any loans, it was probably a bit of a headwind.
Yeah, I agree. I really have nothing else to add there. Want to do small cap of the week? Listener suggestion.
Let's do it.
All right, it's Loar Holdings, Loar. Ticker is Loar. Loyal listener, Cade Invest with the suggestion. He writes Horizons Investing. Here's the Fiscal AI summary. Loar's Holdings engages in the design, manufacture, and sale of niche aerospace and defense components for aircraft, aerospace, and defense systems. They were founded in 2017 and are headquartered in White Plains, New York. I actually think the business was formed in 2012, but Loar's Holdings was formed in 2017 as a holding company. First note I should say is that they're pretty young, but what exactly are the niches that they help with? Because again, you look at these industries, aerospace parts, defense parts can be quite quite lucrative. I'm going to be utilizing Horizons Investing's report and Fiscal AI to help with the brief small cap of the week overview. I have a nice chart here from Fiscal AI. They actually have the KPIs already up and running, and it is the amount of money. I could really visualize this quickly for acquisitions that the company has made. They've made over $1.1 billion and they've increased it over the last few years, the amount of dollars they've spent on acquisitions for their aerospace and defense parts. Roll up, if you want to use our link and get access to all of these segmented KPIs, thousands and thousands and thousands of them across different companies. Use our link, fiscal.ai/chitchat, sign up for any paid plan, and you can get 15% off. All right, back to the small cap of the week. Well, a guy named Dirksen Charles started the business in 2012 with some other aerospace people to build a niche in aero and defense component conglomerate. I think this should pretty, perk up listeners' ears, given, you look at the stock charts for TransDigm and HEICO. It's not exactly the same, but there's some really good profits to be made in this industry. The products can include things like safety sensors, flight control computers, stuff like that. Founder controls 4.3% of the business. 27.5% revenue growth since 2022, 21% operating margin in 2025, 10% organic revenue growth for the last 3 years. Again, confirm how they define that, but that seems very, very good. Fiscal AI says 4 times net debt to EBITDA. I'm not sure exactly that's what the company uses, but they're going for a levered roll up here. The problem, and what's probably going to keep it on my watch list, is EV to EBIT 58. Now, maybe I need to look into it further and see whether the EBIT is actually that, but yeah, yeah, it's expensive regardless of that growth, but definitely an interesting industry, interesting business. Feels like rock solid. You're gonna have durable demand.
Yeah, there's pretty good history here of serial acquirers in the space doing well. The I wonder if maybe they're under earning. My I don't want to necessarily write them off right away just because of a multiple. I actually think that happens. I do that all the time where it's like, I just see a number that I don't like on the multiple and I don't dig any deeper. And there's a chance that they're just like way under earning. I find it, I like it. I'm not like super familiar with the space. We've got a comment from Tyler in the chat that says just invest in TransDigm, best of breed serial acquirer. Yeah, they're the aerospace serial acquirers that run leverage. I think TransDigm
They've
runs at
done well.
like, pretty sure they're at like 7 times net debt to EBITDA usually is what they run at. They have done well. There's better relations with suppliers when you can when you can get multiple, uh, procure multiple items from the same vendor. So like Boeing buying from TransDigm or whatever.
Sure.
So there's some sort of scale economies there. I watch list for me. It's watch list.
Yeah, and compared to TransDigm's a large business. This company, Loar Holdings, market cap's 5.5 billion. So maybe you're getting on the ground floor or something. Yeah, this is going to be one where you need to care about valuation, but it's a big bet on management. It seems like this industry is great, but management, quality, valuation, you got to care about those as well.
I wonder if TransDigm, Heiko, obviously larger businesses. I want that might not move the needle for them, where there is room for a player or a serial acquirer that targets potentially smaller businesses like a Loar Holdings. That's purely speculation. I don't follow any of those companies, but I imagine as you get bigger, there's less emphasis on these tiny deals.
Mm-hmm. All right, should we talk about Meta's new compensation plan?
Sure, I guess what
Did you
Mark's
see
not
this?
worth enough.
No, Zuckerberg is not included. So a little different strategy than Musk on that front. But Meta has instituted a price target stock option plan in order to properly align executives and shareholders. The lowest tranche, 1,100, highest 3,700. I believe it's over the next maybe 4 years. Maybe it's a little longer than that, but not too long of a time period. Current stock price 564 and falling. First question before we get another meta topic and why the stock is falling this week. Does this get you more interested in the company?
Uh, if I were to invest in Meta, it wouldn't be because of this, but it's better than some other compensation plans. Yeah,
I
I
think
would say it's a positive. Green flag over a red flag for sure.
yeah, it's better than just throwing out RSUs to 100,000 employees recklessly. I saw some crazy figures on how much SPC is costing Meta. I want to say it was something, yeah, it was in relation to this article. It was something like tens of billions in like paying the tax withholdings and repurchasing stock for the RSUs vesting. Yeah, it's just a lot. And, you know, maybe this will align them better. If
They
you
have,
actually tie it to
yeah.
stock performance, yeah.
Maybe I've just been reading too many headlines, but they do seem a little loose with what they're willing to pay employees. The biggest red flag was what they paid that guy to run the AI lab, Alex Wang.
$14 billion. Yeah, who would be
Yeah,
like a
come.
mid-level guy at Google's AI lab, who's not, who would maybe not even be a top 10 engineer there. Yeah,
Yeah, just like what are we doing? 14 billion.
exactly.
That's what a good chunk of their cash flow.
Yeah, it's fair. That's fair. I
I
mean, yeah,
what are they doing? 80 billion in free cash flow? I mean, I'll
yeah,
pull it up right now.
Alphabet, I believe, spent like $1 billion to reacquire the guy that invented the transformer model and pretty much was one of the groundbreaking researchers in all this. That might be a fair price, but it's definitely not, you know, $14 billion for a guy that started some rapidly growing startup. Do you have
46
the number?
billion in trailing 12-month free cash flow. Granted, big capex cycle. So, but nevertheless, yes, they are paying 25% of their free cash flow for one employee.
And you need to go down the line and look at how much of the SBC in the either the investing, I think it's the financing one. You probably won't, maybe not have that on Fiscal.ai, is going to this stock option stuff. Okay, here's something that's more serious and why the stock is down this week. We have reached some landmark court cases. There's actually thousands of them out there in Meta and social platforms versus mainly children health and addiction. Here's a quote. It happened just, I think, in the last 24 hours. The judgments for the plaintiffs threaten to undermine long held protections that have shielded internet companies for decades. They suggest future juries might be receptive to a product liability argument against social media, which forms the basis of thousands of similar lawsuits waiting to be heard. And they encourage new plaintiffs to come forward, raising the prospect of mass litigation that could stretch for years and lead to settlements or changes in the industry, akin to legal campaign against the tobacco industry in the 1990s. And a lot of people will point out, hey, tobacco did great since then, but it's not the same. It's not the
It's like
same. You're,
the asbestos claims, kind of.
yes, it's probably more similar to that.
And so, do you know what the specifics were of what they
Uh,
are
this,
guilty of?
so the specifics of the jury, I believe, decided, and again, some of this stuff is qualitative, but it comes around purposefully or basically going a blind eye to addicting children to your products, and having that statement out there and having that be the legal precedent could be very, very detrimental to these businesses. One, you're gonna have to change your business model for the children, which again, like I think anyone in society should want to not have these companies addicting children to spending 8 hours a day on TikTok. And then second, there could be massive, massive liabilities because of it. I feel like the stock reaction is warranted.
Yeah, I don't know where I stand on this. Like, it feels. A part of me thinks it feels unfair to blame the companies that were doing what was in their own best interest, at least financially. But at the same time, especially for companies like Google and Meta, I think when you generate more than $50 billion in free cash flow, you kind of have a civic duty not to destroy society a little bit, or at least
Yeah.
invest heavily in like protections.
Oh, protections. That's my favorite one. What are
I
these protections?
I mean, they have been, from what I've seen. I don't have a kid, so I don't know this, but I I believe they have been investing in a lot of parental controls, which I would think is the way to go about this, is giving like parents the ability to limit time spent and all that.
I
But
think they should have to do tobacco ones where they essentially give you data once the app opens or when you download it, and it says this is going to kill your child's brain. you know. Oh,
Maybe.
sorry. Could you hear that ringing in the
You got a
background? Yeah.
phone.
Apparently in Brazil, it's a big prank for kids to hit the doorbell things at every
Oh,
part. Yeah, happens about once today.
joke's on you.
It's
Uh,
yeah.
yeah, interesting. I mean, if this, if they end up paying claims every year, that's brutal. Yeah.
Or a master settlement agreement. The master settlement agreement was $1 trillion for the tobacco companies over 50 years. So yeah.
So it doesn't. What would you? Social media companies can no longer market. They can no longer advertise. What if they did that the same way they did for tobacco? That just
Yeah,
I
they
would buy Google and I would buy Meta on the spot.
no, no. Well, they're already close to monopolies. They already don't really market that much versus their size. I don't know if it would be this. I don't think it's the exact same as tobacco. Let me put
No,
it that
no, that's probably true.
way. Okay,
Okay,
before we're at an hour. Before we get out of here, people are asking about this Bloomberg report on Nintendo Switch 2 supply reduction. Let me just say the article is completely wrong. That's all I have to say.
all right.
Demand is rising because of this Pokemon game and the movie. I have no change to my thesis. But there's also questions about building watch list portfolio stuff, rebuilding our portfolio with stuff we've never owned. And I would say that we're saving those for potential Wednesday episodes, but I appreciate all those ideas.
Let's do that.
Ryan?
Let's do rebuilding our portfolios from scratch. Let's do an episode on that. I like that
But it's a
prompt.
specific question. It can't be stuff we've ever owned.
I'm down. That sounds fun.
Yeah, that's a fun
Stocks.
question.
Let's just go really quick. 3 highest stocks on your watch list. Go.
Let me load up my dashboard. You got to go first. I'm loading up my dashboard on Fiscal.ai. Not a
Okay.
rocket lab.
I don't necessarily. This isn't necessarily on my watch list, but because I own some shares, so but it's a starter position, which for me sort of functions like a watch list. Interactive Brokers is up there. We're gonna have a full research episode on them next week, from yours truly. Um, Airbnb have been looking at as well to size up again, sort of a tracker position, and I would say DoorDash might be up there as well. I might be
All
missing
right.
some, but
Let me go. You're gonna laugh, but I think it's getting cheap. Autodesk, the company's phenomenal. New Holdings and Pacifico Airports. Although I'm waiting for Pacifico Airports to get a little cheaper.
Autodesk, that the chronic frustration of management.
Well, the business is great. The
The
stock's been at
product is great.
$240 for forever. Won't move.
Yeah. Well, the return on brain damage might not be worth it, but
True.
I think that's going to do it. Thank you everyone for tuning in. Thank you for all the comments in the chat. It was pretty active today, so thank you everyone for listening live. We want to remind you that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Stocks is not formal advice or a recommendation. We may buy, sell, or hold any of the securities discussed on this podcast. Thank you again. We'll see you all next time.